The dogs of the Dow is a proven strategy for outperforming the market. So what happens if you buy the ETF dogs? Can you still beat the S&P 500? My results might surprise you. So with the original dogs of the Dow strategy, you're supposed to buy the 10 highest yielding stocks in the Dow. So these are 2023's dogs, and in 2024 a lot of them have done very well. An example is 3M. I held this for a while and made a nice little profit on this one. So according to the theory, we should have bought in December, so around here 160, and IBM is now on 232, so that's a nice little profit on this one. Just don't mention Intel. So that's enough for stocks. How about ETFs? So I couldn't find much data on ETF dogs, so I decided to build my own site to find the dogs and see how they perform. My website's called etfsectordata.com, and there's a link in the description. So if you go to the home page, I've worked out the sector losers for 2024. I should just mention I'm recording this in October, so theoretically there are 2 months to go, but it does look like these are the losers. So rare earth metals, Brazil, Mexico and Latin America in general, 3D printing, and again Latin America. So potentially these are the dog ETFs for 2024, but how about in previous years? So to find this, you go to Rotation Strategies and then look for the ETF Dogs Backtesting tool. If you want to find more about my strategy, then there's also a page where you can read more about it. So I have modified the original Dogs of the Dow strategy a bit. So instead of looking at high yielding stocks, we look for the worst ETF performers. I've done this because otherwise we would just pick up all the high yielding, super high yielding ETFs, so that's not really what we want to do. So as with the original strategy, we buy our ETFs on the first trading day in January and we hold them for a whole year. Then we replace those dogs with the next set of dogs. My website is new, but there are 105 ETFs listed so far. So if you just want to do some ETFs, then you can restrict it to just the countries or regions. And you can also select the 11 market sectors in the US market. I should mention that for optimum performance, it's probably best to select all ETFs. You can also select up to 10 different ETFs. I have tried it out a bit, and it does actually work with fewer ETFs. It tends to perform better with fewer, so less diversification does actually work better for this strategy. There is also a mode if you want to buy the winners instead of the losers. That might potentially be a good strategy as well. More on that later. So the default I have set to 3 ETFs and we won't restrict the selection. So how did this strategy perform? If you scroll down and see this table, you'll see the results. So in the 3 years to date, the S&P has gained a total of 26.68%. But our strategy is up a whopping 69.13%. So we do potentially have a winning strategy here. So let's look at what we did. So in 2021, this is the first year I currently have data for. The worst performer was Turkey, followed by junior gold miners, and then Brazil. So you can see in 2021, Turkey lost 31.69%. However, in 2022, it returned an astonishing 91.61%. So who says you can't time markets? So with this strategy, we would have bought the ETF for Turkey around here. And then we held it till the end of 2022, so around here. So this was a storming run and we would have captured all of this. So unfortunately, the gold miners didn't do very well. Brazil wasn't very good either, only 1.52%, but again Turkey outperformed so massively that it made no difference really. We still had a 26.5% return this year. I should mention the same year the S&P 500 had a terrible year. So in the following year we bought these dogs, online retail, a trending and meme stocks ETF, and also Vietnam. So again, this trending and meme stocks, I don't know what's in it, full of junk really, meme stocks, GameStop I think mostly. So this had an amazing run, this was up 52%. So even the lagging one, Vietnam, actually put in a not too bad performance. So this year we did outperform the S&P, which also had a very good year. So 2023's results were very impressive as well, apart from rare earth metals which really bombed. What's interesting is that we captured the bounce in the China and Hong Kong stocks. China was a lost cause for a long time, and then this huge short covering squeeze happened in the autumn of 2024. So what of the current year's dogs? So rare earth metals is here again. I don't know how hopeful I am of a rebound on this. Maybe I might have to have a setting to restrict material stocks. However, if you start restricting stocks, then that may not actually be a good thing. Interestingly, right now Brazil and Mexico and Latin America's stocks in general are appearing in the dogs. Recently, a well-known YouTuber made a video about Mexico and how it was undervalued, so maybe this tool is onto something. So let's have a look and see what happens if you change this setting here. So if we just have countries here, so let's see, we currently were up 69%. If we restrict it to countries only, then we'll be about the same actually. There is also the US market sectors if you want to just restrict yourself to the US market. Obviously, it is more difficult to outperform the market itself if you're buying parts of the same market. But we will see that we did actually beat the S&P, not every year, but we did a pretty decent performance. So we would have bought biotech, consumer discretionary, utilities we would have bought last year, and know that they've had a storming run this year. Right now it's saying that we should buy real estate. You should see in general that the market in 24 has been generally good, so nothing is really down in the US market. As a prediction tool, I think this one is quite good. Consumer discretionary, these stocks have been absolutely hammered this year, so I could see this one coming roaring back. Energy as well has been really beaten down lately, and real estate should do well if interest rates are cut. Another thing you can do is to restrict yourself to a different number of ETFs. So let's go back to all ETFs. So if we buy 10 losers, obviously you have a lot more diversification, but you tend not to get such a good outperformance. Let's see if it works for countries. If we try 10 different countries, obviously this is a lot more diverse. And you see this one just barely outperforms. And if you take into account slippage and dealing charges and things, then we probably wouldn't have beaten the market here. Another strategy you can do is to buy what I call the inverse dogs. So instead of buying the losers, we buy the winners every year. So this is normally what people do. They like to follow momentum and buy into something that's doing well. But does it actually work? So you would have made a profit, so it has done quite well, but it hasn't beaten the S&P, so it's not really worth the time and effort of doing this. How about countries? If we buy the winning countries, again we actually underperformed the S&P500. So I know that people like to look for momentum stocks, but this performance doesn't actually show that it's a good idea. Another example, if you restrict it to US market sectors and you buy the winners, then you'll have really underperformed. So this year, if you buy utilities, financials and industrials, then in 2025 you might be disappointed. So if you're in the future and you're in 2025, then let us know in the comments whether this was a good strategy or not. I hope you found this video useful. I'm in the process of adding some other ETF scanning tools to help choose funds that could potentially outperform the market. Thanks for watching.